the Intellect Design Arena Limited financial results for the fourth quarter of the fiscal year 2023-24 ending 31st March 2024 and also the full year of 2023-24. The investment presentation and press release has been sent to you and is also available on our website. Our leadership team is present in this call to discuss the result. We have with us today Mr. Arun Jain, Chairman and Managing Director, Mr. Manish Makan, CEO of IGTV, Mr. Rajesh Saxena, CEO of IGCB, Mr. Banesh Prabhu, CEO of Intellect AI, and Ms. Vasudha Subramaniam, CFO. Besides, there are some other senior members of Intellect management team who are present in the call. Now I hand over to Vasudha to take you through the financials, and later Mr. Arun Jain will give his comments on the same. This would be followed by Q&A session where a question will be replied by the senior members of our management team. Once the Q&A starts, you can ask a question by clicking on the raise your hand, and we would unmute you so that everybody is able to listen to you. One safe harbor. I would like to remind you that anything which we say, which refers to our outlook for the future, is a forward-looking statement. This must be read in conjunction with the risks the company faces. With this, I request Vasudha to give her briefing. Over to you, Vasudha.
Thank you, Pravi. Good evening, everyone. It's a pleasure to be before you as we step into the 10th year of innovation, growth, and resilience. Your continued support is invaluable as we navigate the dynamic landscape of fintech industry. Well, let me delve into the numbers to share our progress and financial insights. Our Q4 revenue stood at 612 crores, and excluding GEM, our revenue was 603 crores. We made an EBITDA of 137 crores and 155 crores without GEM. Our margins for Q4 would have been higher by 18 crores without GEM. Our days sales outstanding was 122 for Q4, and without GEM, we are in less than 100 days range on the DSO. On the cash front, we have collected 570 crores during the quarter and had a cash balance of 776 crores as of 31st March 24. I would now like to take you through the full year metrics. We recorded a revenue of 2,513 crore for the year 23-24, generating an EBITDA of 549 crore and a PAT of 334 crore. This PAT is without considering the one-off exceptional item relating to MAT credit, a write-off of 12.5 crore. Cash collection during the year had crossed 2,300 crore. We had won 52 deals during the year and have gone live on 54 digital transformational projects. Let me now share our last 12 months metrics, which gives a comprehensive view of trends and our sustained performance over a longer period. The growth in the LTM revenue compounded annually for 3 years is 19%. The year-on-year growth in LTM revenue was 12%, and excluding GEM, it remained at 14%. Similarly, the 3-year CAGR for EBITDA was 15%. The year-on-year growth in LTM EBITDA was 22%, while it was 27% excluding GEM. It is important to note that our year-on-year growth in LTM of PBT was 27% including GEM. Over the year, as we closed at Q4, our funnel sizes improved from 7,000 crores in Q3 to 8,000 crores in Q4, and we see consistent growth in our big ticket deals, which we call as destiny deals. During the year, we had deeply involved into a lot of events across the globe in Toronto, Amsterdam, London, Paris, Dubai, and Nairobi, besides others. We commenced the year 24-25 in having 300 plus global experts within Intellect coming together to converge on ideas and innovation.
Who is moving the slides? Stay on the slides, she's speaking.
So she's talking about VMAX.
No.
Yeah.
All middle slides are left or something?
No, sir. It's all covered. No, it's a P&L in that.
Okay.
We had a series of structured sessions as part of eMAC.ai Summit. This helped us a lot in sharpening our thinking process and expanding the customer canvas, country canvas, product canvas, and distribution canvas. With this, I'm handing over to our chairman, who will provide a lot more insights on the business performance and growth journey. Thank you.
Yes, just to America.
Okay, so I think so. The quarter, what we are looking at it, actually, eMAG.ai. We are speaking about eMAG.ai from last 4 quarters. It's gaining the momentum because of first principle thinking, what we have brought in as one of the most disruptive technology in the financial space. It's still a lot of deals, which is the pipeline is increasing, is translating into the revenue. So the number we were designing the business for 20% growth, we achieve a 14% without GEM. So there's a shortfall from that perspective on the expectation between 20% of what we are designed, and this time it's a 14%, and that's where some of the delayed deals or carry forward deals are coming into picture. But if you look at the pattern of new deal sign up, which is accelerating, so one is on the past total number, but total deals, which is 8 deal wins in North America. Deals wins. Yeah, 8 deal wins in North America. So this is one important point. North America last year, when I was speaking on annual it's not annual day, it's annual business plan, annual board meeting. So annual board meeting, I was speaking about that we have to emphasize on North America. As such, North America start giving some results in a single quarter, 8 deal wins, and out of which 6 deal wins are in AI business, is a credible performance of North America. It has both areas. So one is around CBX deal, which is around digital contextual banking experience deals, and AI deals. So these are 2 main line of business, which is eMAG.ai is driving the growth. One is digital growth and second is my AI growth. So composable and contextual growth. Okay. And both the places we are finding the outcome over there. Then there's one large deal in Europe on core banking, which is very, very important after OTP. The momentum of core banking is continuing in Europe. We announced OTP last quarter. This quarter, another bank, Wakif, is announced. And then 2 deal wins in Middle East and Africa, which is around DTB platform, which is again continuing the momentum of DTB as a leadership. There are 3 deals in India, which is around, one is around DTB. All three are DTB deals as of now. And there was 1 or 2 deals which got postponed for next quarter. So there are 3 deals, which is all 3 deals are DTB deals of the last quarter win. Then there are 2 deal wins in APEC and ANZ. So 1 deal in Vietnam and second deal is in ANZ. There are 2 large deals which are signed up in APEC. So it's a very balanced. So beauty of the model of expanding into so many countries is to create a basic foundation on which we can grow the business year on year. And some of the deals which is announced, we have shared this time the size of their asset size in their deals to indicate the size of the bank. So they are choosing the right enterprise grade software. During the board meeting, we were having a lot of presentation on security, risk management, and enterprise grade software in a new world, because with a lot of moving parts which are there on security, on the cloud, on the open sourcing, the biggest challenge is to ensure that it's safe for the bank to run on that platform, and technology becomes a critical edge over there. So we are finding people who are running a lot of legacy system are getting some regulatory notices because of the weakness of the basic architecture, where the leakages of the data happens because of that structure. Today we have these deal wins are based on almost there are 42 elements in cloud management alone. They are close to 40 plus element in the security elements alone. So a lot of time when you ask a question whether fintech can compete with us or what is the role of you and fintech, I think the cost of managing continuous open banking platform in terms of the level 1, level 2, level 3 security has gone up so high. The bank risks are multiplying, though it's giving a easiness for operating, but managing the risk becomes substantially large. And these deals, which is being, I'm talking about 16 deals, they have gone through the scrutiny of almost close to 150 architects before they have signed the deal with us. So this space is becoming, on one side we say fintech is a competition, on the other side we are finding fintech is becoming more difficult for winning the enterprise grade deal, and they are getting pocketed into the small area for driving the business growth. Going to the next slide. The transformative open, so this is a Gartner, Datos and private bankers. So I think this entire report on composition technology, Intellect is getting a big traction with all the analysts. It's not about just the product, what they are looking at it. They're looking the architectural, the strength of the product, decomposition of microservices, decomposition of API, and the zip coding of API so that it can be reused. So we don't create the forest of APIs within the banking system, which is resulting into the pipeline of the Intellect is going up quarter on quarter. We started the year with 7,000 crore. We are ending the year with 8,200 crore. Number of deals, if you look at it, has moved from 70 destiny deals to 84 destiny deals. And the details of the deals are there in the next slide. Deal win, that accounting is over here. I'm not getting into each one of them, but this quarter is one new important point is the greater than 50 crore deal. There are 3 wins in that area of greater than 50 crore deals in this quarter. We lost 1 large deals because of political environment between India and Canada. The rest of the deals are okay as per the right traction is there. Company is paying 3.5 rupee per share as a dividend, which is 70% compared to the last year. It was 2.5 rupees per share. This time board decided to have a 3.5 rupees per share for the expanding the procurement space in GEM. What we have learned, we have moved to applying my AI technologies and composable technology, turmeric and AI. I combine them together and launch from banking system to a large corporates and governments where they have a need of a procurement system, where the major competition is Ariba, which is quite expensive for the many markets. And we could able to build in just 6 months time. The team has able to build up corporate procurement exchange, government procurement exchange, and account payable exchange into 3 products which have come up. They are AI-based products and digital-based products. We already are signing 2 deals in CPX space in this month. We are expected to sign 2 deals in CPX space and 1 deal in APX space. We have started evaluating at 2 places in GPX. 2 proposals are there in GPX space, which is the government procurement. So the team which was released from GEM now getting into proper profitable business. Whatever the learning we got it, where you all seen the number of GEM and without GEM, it's getting into the profitable business. Whenever we'll be signing the deals over there, they may have an investment period of another 2-3 quarters, but after that it may result into a good traction. Other important point which I want to work on is this next picture, which we are saying EMEX Summit. This is the power of Intellect. 300 people, 300 leaders from 31 countries, 2 boot camps, 1 purpose. It's the largest congregation for 9 days. This leadership team started beginning the year with a new agenda of eMACH.ai to become the disruptive platform for the world. Every one of the leaders have gone through the 2 boot camps of 3 days each. One is on AI, the Purple Fabric, and second boot camp is on turmeric. The workshop was organized on 3 spaces called organizing the thinking space, expanding the performance space, and impacting the business outcome. So 300 people, when we brought them together, we need to come with the common thinking space where we looking at it, how do we create the disruption in the world. Then you expand by simplification of the process and systems, expanding the performance space by frameworks, and then impacting the business outcome. As I mentioned, the 2 boot camps and main summit. So 3 days, 3 days, 3 days. Over here, iTurmeric Mac Composable Technology Bootcamp. And it was very, very interesting that my salespeople in the field, some feedback? So in both the sessions, it was a hands-on session where the ease of the platform got worked out by simplifying the system so much that a sales head of the UK and sales head of Australia could able to build up a loan repayment API and a UX screen on themselves after 2 days of workshop. So that was the proof of putting that how these 2 platforms, Purple Fabric platform and iTurmeric, can reduce the cycle time and the efforts for disrupting the market. Next. The eMACH AI world is changing the paradigm from product-centric organization to customer desirability products, from coding to composing, and from enterprise siloed knowledge to enterprise connected intelligence. We are contributing in 4 different ways. We are participating in a deal which is transforming the enterprise in core banking space, in lending space, in wealth space, in payment space, in DTB space, in card space, treasury, trade, supply chain, finance, custody, GPX. So this could be a complete deal of transformation. Using AI, we are using to transform operations for the bank. We are transforming experience using relationship manager office, corporate, SME, retail, banking exchange, which is a contextual exchange, CBX. Or we are able to expand capability of the bank by helping them for one origination platform, customer onboarding platform, virtual accounting platform, accounts payable platform, and corporate procurement platform. So these are 4 different ways my sales team is going and leveraging our systems. There are 3 levers of growth. We are leveraging around customer canvas. Today we have a rich set of top 50 accounts on which we have focused attention to grow those accounts. They are the leaders in their own geography. We are saying Magnificent 7 and expand 18 and focus 36 are the 3 agenda points which we are driving on customer canvas. Then we are deepening country coverage. Whenever we are present, we have chosen 11 countries where we want to deepen our country coverage. While the rest of the countries, we want to work through the partners. And then specifically choose the right product proposition and grow across country and across customers. So this year, the focus is clients, go more products. So GCB products should go to GTB clients and vice versa, or AI should go to all the GCB and GTB products. So that's the approach for growth opportunities. This is a few glimpses of the eMACH Summit, which we had for 3 days. We spent a lot of time, I spent a lot of time, and we spent a lot of time in global event and launching eMACH.ai. You might have seen in the LinkedIn, we had in Dubai, Paris, London, design thinking residential program, Dhaka, and we are going country by country. I'm traveling to London again next week, and then to New York, and then to Canada. So every week there is an agenda for launching this. There's a large traction on global events, on SciBoss, IGTV, Oxford, Money 2020, GTR. So there's big traction on creating awareness of eMACH.ai. Next. Sustainability agenda. So we are looking sustainability as a core value. Last year, we published the first report of sustainability report. This year, the sustainability agenda is moving at the next level. Our campus is purely 100%, there's no zero discharge from the campus. In last 1 year, there's no single wastage item is going out of the campus as a waste. And all are recycle or reuse, including water, food waste, or any other waste. And there are almost 15 initiatives in sustainability, which are happening from social transformation to employee sustainability awareness to employee participating. So we had a sustainability week in February where 5,000 employees taken a pledge of sustainability in a formal manner. So sustainability is we are using GRI framework and BRSR framework for doing the sustainability, which is the next slide. So exciting times. So lot of exciting time for all of us. And I think Banesh, Manish, and Rajesh, all three CEOs are on the call. Fortunately, Manish is traveling to Chennai this time, so he can be present from the Chennai headquarters. We can now open the platform for question answers.
Praveen, you can open up for question answer.
Yeah. Please, in case you want to ask a question, please click on raise your hand. In case you want to ask a question, please click on raise your hand. Please click on raise your hand. First, we have Mr. Vivek Taruga from Westfall. Vivek?
Hi, sir. Are you able to hear me, sir? I'm audible.
Yes.
Yeah. Please go on.
Thanks for the opportunity. Sir, Arunji, you were saying it's palpably exciting in your press release. So if you can guide us about the next year's growth in terms of, because during from the time you're listed till today, one thing that has been consistently right is your sales guidance, even though margins because of the investments or something like GEM going away or something like Ukraine war coming. So even though margins are cloud, you have to invest in eMACH.ai. Even though margins and PAT didn't go according to our trajectory, sales, at least over every 2-3 years, your sales guidance was perfectly on the tee. So if you can guide us, because you said this is Intellect 3.0 and all your products, and now that I'm not the one to say whether all the investments are done, but I think eMACH and investments are mostly large part is done. Can you throw light on whether there will be acceleration in sales growth, which can lead to huge operating leverage, and we can see that in both PAT and margins in a sustainable way? This is my first question, Arunji.
Yeah. There are two kinds of growth we are measuring right now. In AI platform, the growth number, the penetration in the accounts will be large, like 6 accounts deal in last quarter. The translation into financial number will be smaller because those AI deals will be using a platform. So financial numbers versus deal numbers will have a different kind of a correlation. But deepening those destiny deals will help in ensuring the growth momentum is sustained. Second is what you are looking at it, how you are providing your operating leverage. Operating leverage is happening. We are seeing that in last, without GEM, we are not gone down the numbers. So last quarter when we discussed the numbers, almost 70 crore revenue went away, which got filled by the 7% sequential growth from quarter to quarter, from last quarter to this quarter. So looking at a guidance right now, I think we are still navigating the guidance. We have designed the company for 20% growth. But looking at the total IT industry going towards a slowdown from the perspective of all the counter player, we still dwelling whether excluding GEM guidance, if I remove the GEM revenue from the $303 million revenue, around $30 million if I remove from GEM, it's around $273 million revenue. On that base number, we are looking around 15% guidance could be there.
For the whole year, next year, right?
For the whole year. It may not be quarterly balanced, but a whole year it can be.
So, and over the next 2-3 years, you're confident of greater than 15-20% for next 2 years.
20% is a designed element. But it can sometime it can become 25%. That's a kind of a ups and downs can happen. Last year we lost three big deals which could have transformed the entire landscape. One is one of the largest bank in India. They've gone for a very small company. Second is one large deal in Canada. And third is another deal in Europe. If these three deals would have come in our way, we could have been very different looking company. And these deals were in range of $100 million plus. We signed one OTP, $100 million plus, but there are two more deals of $100 million plus, which we just lost because of political reasons, where we are almost there.
So the second question is, in the last 2 quarters back, you said three wide movements are there in terms of core banking, in terms of digital core banking, and then BaaS in terms of GTV and AI. So if you can elaborate on how these 3 wide movements are actually, how confident now we are on winning deals and any competition, and in terms of core banking, where are we now? Are we winning? We are more confident of winning more. So if you can, these 3 wide movements that you mentioned 3 quarters back, if you remember. So
yeah, I think all 3 are perfect on the dot. You can start. Manish can start.
Then got them all of that. You would have seen all 3. After doing OTP, Waqif Bank was another next Europe big transformation. In AI, Arun already talked of the 6 deals, and we have 2 deals on BaaS, one in US and one in Australia. So expanding out multiple of these sub-accounting platforms. So all 3 patterns have happened.
So
Rajesh, you want to cover?
Yeah, if I can. Momentum. Yeah. Specifically, let me talk about core banking. I think from a core banking perspective, the last year was a very good year. We closed many deals. I think we closed more than 8 core banking transformation deals in the last year. And as I look at the pipeline continues to be very good. It's deep pipeline. We are in multiple stages. And what we are also seeing from a core banking perspective, I think we talked about this as eMAG.ai. What we are seeing is that we are now getting called by large tier 1 players, regional players, etc., which is also putting pressure on us from a pre-sales perspective. But we are seeing that graduation of how we are getting into larger destiny deals. So core banking field, if you study, is right now there are many opportunities, and we believe that we are well poised to take advantage of that.
You just mentioned that 100 million deal of some bank you have lost in India. So what are the reasons? Is it just because of competition, or are you seeing any trend that you want to highlight?
India was not 100 million. It was $50 million size of the bank because of low pricing by the competition. So very low pricing.
So overall, we are confident of 50% over the 3-year period, given we are now most of the investments have been done in the products and platforms. Can I take it?
Yeah. Well, the investment will be required. More investment will be required in AI right now. We are the Purple Fabric, which I'm mentioning, with the generative AI, we are finding a big traction. We built Purple Fabric is a one platform where we are bringing 5 different knowledge banks in the knowledge vaults or knowledge repository to create a connected intelligence at enterprise level. We're talking to all the big 5 consulting firms to look at it, to deliver expert agents and co-pilots on the top of AI. This is the area where we may require another investments, like we had last year 140 crore of the investment. Last 2 years we are doing 140 crore from 120 crore. So our investment bucket is $20 million. So it's still it may come 160, 165 crore for the coming years, the investments. So that, but it's not a large investment. It's just a 20 crore, 25 crore more investment from that perspective. Other products are ready to go to market. So operating leverage can start coming this year.
Oh, sorry, Arunji, just why I'm pressing on this is because now that you have started investing in distribution and you started also partnering with many system integrators. That's why I was expecting to be more confident on our growth. So that is why I was just pressing on this because
we all love it, but let's wait.
I think it will take take the system integrator route to start kicking in. We've had few wins this year. They need to also feel confident once we deliver it. In a 12 to 18 month period, the indirect distribution will suddenly start adding significantly over there. That's the right journey we have started.
I'm meeting the right CEOs of all these SIs now. So now they are coming to us, which was reverse way. So I think that wheel has rotated. How will it translate into numbers? Since this is an investor conference, not a business plan conference, we are cautious about it.
Thank you, Arunji. Thank you very much.
Who is next?
Can we have Rahul Jain ask the question, please? Can you unmute Rahul Jain, please? Rahul, you can ask a question.
Mohit Jain.
Yeah, hi. Is it audible?
Yes, Rahul, we can hear you. Yes.
Yes. So just one clarification to start with. When we said 15% guidance is what I heard, is it on the adjusted basis for our revenue of GEM in this year, or this is on the reported basis that we expect to deliver for fiscal 25?
Adjusted basis, I mentioned clearly, 273 million.
Yeah, can you hear me?
Yes, it's better now.
Okay, you want me to repeat the question?
I mentioned the answer is it's on a registered basis.
Yeah. Okay, sorry, I could not hear. Secondly, in this quarter also, when we see this adjusted working that you have shared, it kind of imply there's the 9 crore revenue that would have come from GEM in this quarter also, and there is a 27 crore like-for-like cost. So, if my computation is right, can we understand how it should shape up now? Does this 9 will be give or take a very small number going forward? This 27 crore worth of cost can be repurposed in the subsequent quarter, or how and when we are going to take the benefit out of this?
This 9 crore of GEM additional revenue. This was a backlog of some CR getting booked on the last quarter. So whatever we completed till December, those actual billing happened during the Q4. So that's the only backlog. Nothing future related.
And this 27 crore cost that we are saying, can the same cost can be repurposed for other projects, or how long we expect it to stay?
This 27 crore cost, which is has been GPX and CPX, what we have launched is directed towards that. And that they have a good plan to look at it next 2 quarters to start generating a revenue over there.
Right. And just one last bit on the general view in the market. You already highlighted about the macro thing. But so far, at least what we have observed is that in the software industry, the pain is not as huge that we have seen in case of services business. So do you think there is some kind of an adoption curve which is now taking shape, which is supporting the momentum and can ensure growth to continue for this fiscal and beyond, or it's too early to conclude that kind of a thought?
And this growth is coming from the pipeline, the funnel which we have, the 80 plus destiny deals we have. So that's the reason for the growth numbers more than any market scenario. This is more grounded basis.
So basically, you are attributing this to strong execution, which if we are able to continue, we should be able to deliver this.
Sure.
Okay, great, sir. Thank you so much. That's it from us.
Thank you.
Thank you, Rahul. Next, we have Mohit Jain. Mohit, please ask the question.
Yeah. Sir, congratulations. Reasonable quarter. So first is on the US. I saw you have announced 8 deals, but it looks like eMAG.ai had its first win there. So is that correct? And what are your plans for US? And then I have 2 follow-ups on GEM.
So, Banesh, you'd like to answer the 6 deals you won. What is the traction in US on your AI space in US?
Also beyond insurance, if you can talk a little bit about if core banking is going there or some other products that you're going to offer beyond insurance.
Sure. We'll come to that. Let's hear AI and then we hear our CBX product in Canada and US. That's the second product line where I'll ask Rajesh or Manish to discuss about the Canadian market where we are getting momentum in North America.
Yeah. So just to update you, Mohit, I think the fact that Intellect AI very early had adopted AI first approach to our businesses on the insurance side is now building a good pipeline. I think we've done 6 deals. We've got an excellent pipeline to complete and we have quite a few contracts out there. It does take time to close some of these contracts, but we are well in progress with quite a few deals as we speak. Clearly, I don't need to everybody's aware of the amount of activity taking place in the AI space. And I think some of what we've done as investments over the last few years on AI is actually resulted in a very good platform that, Arun has already talked about, which is giving us the connected intelligence from an enterprise perspective, which is quite unique. And I think a lot of the product focus now would be to start leveraging those capabilities for our clients across the Intellect businesses in both GTB and in the GCB business lines. So a pretty good pipeline for the insurance businesses coming over the next few quarters. Similarly, also, we have closed out some good wealth deals, but they're under contracting and they're quite significant. So hopefully we'll get traction on that too. Again, we bring a lot of AI capabilities for wealth advisors in the market. So I think we expect that to also do quite well in the next couple of quarters.
Okay, and this was through a partner, the eMAG.ai, or was it through our own sales team?
Our own team. But at least for insurance, our own team. But we have a very strong relationship with both the large cloud providers in the US.
Great. And the second was related to GEM. Now we have given ex-GEM numbers for the first time. So the recurring margin is whatever you have shown in Q4. Now that is the new normal for Intellect, or how should we
That's
take
right.
it in FY25? 26%
That's
is
right.
what you're looking at.
Yeah, calculating very quickly XM number, but I think 23-24% because some investment will be required. So around 24% numbers we're looking around.
Around 24. Okay.
Yeah.
And sir, your tax rate, now that we had this exceptional item, and I assume you have moved to the new regime, so now should we assume 25% as standard tax rate going forward?
It be, yeah.
The ETR across the globe will be 23%. Maybe for India, it's 25. So we'll optimize it to 23% at a consolidated level.
Right. And ma'am, last on receivable days, you have also given DSO. Now that's the new DSO number for Intellect, or how should we read going forward? Because I was assuming from 1Q numbers will be ex-GEM only.
Yeah, so what is the old pending is there in GEM, we will be reporting separately because there is a pending money sitting there. Okay. If we are looking at non-GEM business, receivable will be less than 100.
89, 90, I think you have reported around.
Yeah, 90 days, which is there.
You can take it as less than 100 days.
Less than 100 days, definitely less than 100 days.
At the consolidated level.
At the consolidated.
Correct.
But GEM we will keep it separate. We'll park it separately to collect the money. It's taking its own time in Government of India to collect.
So there also DSO, I think this should get over in 6 months or something like that.
If the government pays in time and it's over in 6 months time, logically it should over in 6 months time, but you need to keep the fingers crossed.
Got it. Now, thank you, sir, and all the best for 25.
Yeah, thank you.
Thank you. Thank you, Mohit. Please, I request everybody, in case you want to ask a question, please click raise your hand. Please click raise your hand. As of now, doesn't seem to be anybody any further question.
Okay, that's very good news. I think we communicated well on the some more. Yeah, 4 questions are there. Yeah, please. Yeah. There are 3 more questions are there.
Next, we have Mr. Nishit Shah. Nishit bhai, please ask your question.
Yeah, hi, this is Nemish Shah from MK Investment Managers. Again, I had some one clarification with respect to GEM. So if I just compare the Q3 numbers that we have provided with GEM and without GEM and compare the Q4 numbers. So in Q3, we had a cost base of around 67 crores in GEM, which has come down to about 27 crores in Q4. So just want to understand, were we able to redeploy costs of about 40 crores? So what is this 40 crores differential cost with respect to GEM, if you can clarify?
Yeah. Q3, we also had GEM in the sense GEM got ended only by mid of December. So until such time, we had GEM costs. We had third-party costs related to GEM and all. So in Q4, we conservatively made some provisions for some of the costs. It's not a provision against the doubtful debts, but for some of the liquidated damages, we made some provisions. So as it is, in Q3, we had GEM at least till fag end of December. And that is the reason for the difference.
He's asking how have we deployed 40 crores?
That's what in QPX. Yeah.
QPX. Yeah.
Okay, so that was largely a third-party outsourcing cost.
We had a third-party. Yes.
And this 27 crores, that is any third-party cost related to that, or that is largely on our books?
27 crores did not include any third party. It included some of the employee costs. So we retained them for redeployment. So that cost is also getting included. And secondly, we also, as I said, we made some provisions on some liquidated damages, and because of which is what our ETR for the quarter is also a little high, because that's been disallowed for the purpose of income tax. And we also had some capex related cost on account of GEM. So all these 3 constituted this 26 crores. There was no third party cost involved in this part.
Got it. So, going forward, not entire 27 crores will continue, or it will be lower than that, if my understanding is correct.
Yeah, it'll be lower. Yeah.
Got it.
We may make some investments, but it will not be the entire amount.
Got it. Yeah. Yeah, that's it from my side. Thank you.
Thank you, Nimish. Next, we have Mr. Umang Shah from Banyan Tree Advisors. Umang, please ask your question.
Yeah, hi, sir. Am I audible?
Yeah, please go ahead.
Okay. Sir, are we seeing any lower competitive intensity from Temenos, considering they have some own issues that they need to look at on PR side?
Rajesh?
So actually, it's a very interesting and a difficult question to answer. But when we look at it from a market perspective, we are seeing Temenos still very much in the fray. So we have not seen that as if the intensity has got lost. This is the grounds from the ground market feedback.
Right, sir. Right, sir. That's useful, sir. And sir, in terms of Thought Machine, wanted to understand that Arun sir made some comments about how new age fintechs don't have the kind of security features that we do. Would you include Thought Machine in that, or would you say that on the, at least on security front, all the three firms are on the same level?
Rajesh, you want to answer?
Yeah, please go ahead. I can add, Arun.
Yeah. I'm saying Thought Machine as a framework. So basically, Thought Machine provides a framework to the bank, not a full core banking product as such. So their strategy is slightly different from Temenos and Intellect. Our strategy is to provide a full, complete domain-focused product, where on Thought Machine, a lot of things has to be worked out by the implementation partners. So implementation partners makes a lot of money on Thought Machine. Once they have to build a solution, then the partners provide the security framework and other things on the top of it. So on the box, on the cloud, ready product to be used. I think we have invested the money into that. In Thought Machine case, it's a customer who invests that money into them.
Yeah.
Right, sir.
So,
yeah, Rajesh, you're thinking?
No, I was just saying, I was just going to echo the same point, saying that Thought Machine is giving us a simple framework, and the framework, either the bank IT team or an SI has to build on that framework. So if you really compare between Thought Machine and Intellect, we come not only with the underlying eMAC.ai architecture, but we bring the deep domain, the banking domain, and that's what sets us very unique from Thought Machine.
Very useful, sir. Thank you so much.
Thanks, Umang. Next, we have Mr. Mukul Verma from Verma Associates. Mukul, you are there? Mukul, are you there?
Sir, Mukul left actually.
Mukul left actually. Okay. Next, we have Mr. Nitin Sharma. Hello.
Am I audible?
Okay. Yeah, please go ahead.
Yeah. Good evening, sir. I just wanted to check on the buyback front. Last time when I raised this question, you had said that during discussions at the board level. So can we look at something on that front in the coming year? I think by this year and you will be in excess of 1,000 crores cash on books.
Yeah, once we are crossing 1,000 crore, then definitely we can look at it. So we should be, as you rightly guessing the right number.
And so just
one
more thing, with the RBI getting very harsh on Kotak Bank, Paytm, and other banking institutions for want of technology spend because of their either the business going up and the technology is not commensurate with the software they use. So how do you look at it? How does that kind of generate more business for us, or is it something where they will have to go back to their existing vendor to set this right? Because I heard the Concall of Kotak Bank where they said they are already investing 1,700 crores in technology and they are going to invest much more to get things on track. to start online onboarding through the 811 and credit card. So does it?
I appreciate your reading the right news in the system. And in the beginning, I mentioned there's some leakages in the old system. So it's like an old building. Legacy application is like a old Bombay buildings or old Delhi buildings, where leakage will happen from somewhere. Now to fix those leakages, either you refresh or you fix by the quick and dirty fix tools. Logically, these two incidents happen in India. There are more incidents are bound to happen in US and Europe. Then only I think the people will pay attention to the legacy migration, accelerate the legacy migration. Still, people are not fully believing it into what the new security standards of the world are. And it will take I would say another 12 to 18 months to understand that legacy core and legacy lending platforms are fundamentally built on the technology. By hollowing the core, by doing patchworks, it's not going to solve the problem. They need to go first principle thinking of understanding what customer events are, what services bank is providing to them, what APIs do they need. Today, they are getting into very, very quick and dirty. And in Indian banks, I'm still saying that the cost of technology, the RFP, still they're not understanding the difference between what enterprise grade software means for the banking. So we are facing those troubles to communicate the story of what enterprise grade solution means to the banks and why banks require enterprise grade software of that nature, with almost so many gates are required and so much investments are required. Very few, we are investing close to 1,000 people in R&D each year. 1,000 people in R&D, I'm mentioning to some US person, is at $100,000 per R&D cost. It's a $200 million per year cost compared to any other vendor in America or Europe. Which company can, that's a huge number for us to invest into making the enterprise grade software. But people are still on the sidelines, not in the center of the stage to making impact. But it will come somewhere, sometime.
Get it, sir. Thank you. Thank you. All the best.
Thank you, Mukul. In case you want to ask a question, please click the raise your hand. As of now, we have Mr. Nitin Sharma from MC Pro Research. Nitin, you are there? Please ask a question, Nitin. Mr. Nitin Sharma? Looks like not there. I'm not able to unmute. Mr. Nitin Sharma, please ask a question. Nitin.
Hello.
Yeah.
Hello. Yeah.
Please go.
Thank you. So on your three new platforms, the APX and CPX, you mentioned that discussions are ongoing. Help us understand, are these discussions focused only for the overseas market or in the domestic market as well?
Just repeat the question.
APX and all, is it just only on overseas market or?
Nitin, louder.
The GPS and CPX.
Discussion. Yes. So the discussions that you mentioned, are they focused only on the overseas market or in the domestic market as well?
Yeah, they are starting from India market and then going to overseas market. So GPX is focused on overseas market as well as some of the Indian states are also looking for procurement solution. So that's marketed on. So now there is a central government portal and there is a momentum of state government also wants a government procurement portal, but this time we'll not be getting into the investment mode. We'll be selling the license. So we'll be getting the money upfront from government rather than getting into the partnership sharing model with the government. And corporate procurement portal, we are finding a large space of procurement in India as well as in Asia Pacific and Middle East before we jump into the Europe and America. It's the same strategy what we do for any other product. First we use India, go to Asia nearby countries and then go to Europe and America. It's a 3-year journey when we move into this direction.
Understood. Thank you.
Okay,
Nitin. Yeah. Thanks, Nitin. I think Vivek wants to ask one question once again, Arun, if you can.
Okay.
Yeah. Vivek, unmute yourself.
Yeah. Arunji, am I audible?
Yeah.
Just you mentioned the previous participant that clients are going for band-aid solutions. So if you can give qualitative, I'm not asking about growth rates and all, but qualitative commentary on competitive intensity across markets, and which products do you think people are ready to invest and you are more positive to drive growth over the next 2-3 years? Because even the last con call you mentioned the same thing, that in India our people are not really going for the enterprise grade solution. So if you can give us where you think our products will find acceptance and where the growth will come from, and qualitative commentary with regards to how qualitative competition is shaping up across our products. Across our products in the sense, at least whatever you want to mention. Thanks. Thanks, sir.
I think Europe is definitely a market which is very sensitive to the architecture change. So when they are going through it, what Rajesh was mentioning an OTP deal, it took us 18 months, 21 sessions of various architecture sessions before they selected us over the Thought Machine. That rigor of selection, wherever they have a rigor of selection, we are getting selected. Whenever the rigor is only RFP based or rigor based on the pricing based, our referenceability become weak from that perspective. So our win ratio in those areas where and it's there in Europe, it's there in Canada, it's there in some portion of US, not all the US banks, but I would classify US into two categories. One is architecturally focused and second is band-aid focused banks. You can see them differently, and there where they are looking architecture, they are looking AI, they are more exploratory. They can be looking at understanding the technology first. I would not say exploratory. They are understanding the technology better. They invest in their strong architecture teams, and then they select the solution. So they are the virtual account system in US. One of the largest bank in US, one of the top 20 banks in US, they selected entire embedded finance platform from us. They took us almost again 24 months to evaluate.
Yep.
So these are the long cycle deals. Now we will have this is our third or fourth deal in US in embedded finance.
Yep.
And once we have 3-4, once we cross the hump of 5 deals in US in embedded finance, then the acceleration will happen.
So BAS, who can we see as our competitors in BAS? Because you've told that, Manishji.
They are primarily local vendors over there who are single monoliner. The good advantage we right now are able to establish is it's part of a full corporate treasury enterprise platform. They could start with a point solution on just managing virtual accounts, on how to manage the payables or receivables better. But a full treasury needs a deposit product, a liquidity product, a receivable product. So the architecture validation through some of these are happening. And once you break through and win with these through architecture, really then the competition eliminates, because it's all legacy in US, or like all of us know.
So you or next few years you see this band-aid things, people having some people realizing that they have to invest in enterprise grade, and anything that you think will force them, or it's
I think there are two patterns I'm looking forward to. One's a positive pattern that some of the banks are making those investments and will generate confidence in the rest of the market, like we have seen. The second is number of accidents are happening. Sometimes that accidents accelerate the wave much faster. At that time, are you ready or not ready? Do you have proven live sites? I think that makes a difference. So that we are following that journey right now.
And thanks very much for the answers. Arunji.
Thanks, Vivek. Arun, we have one last question.
Yeah, just last question. I have to. Yeah.
From Mr. Rohit Balakrishnan from iThought PMS. Rohit, please quickly ask your question.
Hello, sir, am I audible?
Yeah.
Good evening, sir. So just my question was on platform revenue. So this quarter was around 56 crores. So first is, this includes the 9 crore gem, or this is excluding that?
It includes.
Okay. So if I were to exclude that, so we are around 45 crore or around that number, 46, 47 crores of revenue. How do you see this revenue shaping up, sir, over the next, let's say, 8-10 quarters? I mean, just your color would be very useful given we are seeing good traction in eMAG.ai. But at the same time, in the past, you said you will do what your customer wants. So just your comments on this. How do you see the platform revenue sort of coming in? And just connected to this, as a result, then the margins as well, because those are expected to be higher margins.
Yeah, I think we can have a more predictability 3 years from now, not quarterly. So your question is right. In 3 years' time, this business has to be a $50 to $75 million business in platform revenue. Should be there comfortably. So we are targeting 100 million, but $50 to $75 million should be the platform revenue in 3 years' time. So that's a better way to look at the platform revenue right now.
Sure. That was the only question. Thank you.
Thank you. I have to just leave right now. Thank you. Yeah.
Thank you, Rohit. And thank you, everybody, for joining the call today. In case you have any further questions, please do write to us. Thank you. Now you can log off. Thank you.